morning and welcome. I'm Ashley Olson-Onyango, Head of Financial Inclusion and Agri-Tech with the GSMA. I have the immense pleasure of welcoming you to the Mobile Money Leadership Forum today. We have 3 jam-packed sessions planned for you today on the socio-economic benefits of mobile money, innovations in African fintech, and an incredibly important topic on harnessing financial literacy to combat mobile money fraud. So get comfortable, arrange your diaries to spend the day with us here, and I hope you really enjoy the discussions ahead. But before I leave you, I want to set the stage for this first session on the socio-economic benefits of mobile money. Financial inclusion is critical to foster economic development, reduce poverty, and promote social equity. Mobile money contributes to 15 of the 17 UN SDGs. Due to concerted efforts by private and public sector players and innovations in digital financial services, we have seen great advancement of financial inclusion in the last decade. Between 2013 and 2022, the number of registered mobile money accounts globally increased from 200 million to 1.6 billion, an 8-fold increase. The majority of this growth has originated right here in sub-Saharan Africa, primarily in East and West Africa. By 2021, around 1/3 of adults in sub-Saharan Africa had a mobile money account. And according to the recent Global Findex published last year by the World Bank, more adults had a mobile money account than a financial institution account in 11 African countries. As adoption has increased, so too has the value of mobile money transactions, from around $100 billion in 2013 to $1.26 trillion in 2022. That means last year, nearly $2.4 million was transacted every minute. I've been up here talking for roughly 2 minutes, so that means about $5 million has been transacted over mobile money since I started speaking. Imagine. And it's probably even higher as we sit here today in 2023. But you have to wait for the next publication of our State of the Industry report on mobile money next year to find out by how much. Transaction use has evolved too. In 2013, almost 2/3 of global mobile money transactions were cash in, cash out, or airtime top-ups. By 2022, this flipped on its head, and nearly 2/3 of global transactions comprise P2P payments, international remittances, merchant payments, and bill and bulk payments. Mobile money has enabled much-needed digital financial services to underserved and marginalized communities where before there were none, underpinning poverty reduction, job creation, gender equality, and the attainment of broader development goals. There have been several research studies devoted to the positive social and economic impact that mobile money has had on individuals, households, and businesses. Many previous empirical studies have shown that mobile money can reduce transaction costs for users and help households to better manage their cash flows, ultimately enabling them to smooth consumption and manage risks. However, what is less well understood is the macroeconomic impacts of mobile money, particularly when considering its impact on gross domestic product, GDP. There is a link between financial inclusion and economic growth, but less is known about the impact of digital forms of financial inclusion, and in this case, mobile money. To address this, we commissioned our colleagues at GSMA to determine the impact of mobile money on GDP, using the rich data that we've collected over the last decade. In the past, some studies have focused on a particular country or region. We're proud to have been able to do this at a global level, something that has not been done before. The GSMA has published a technical note. So for those of you that are admittedly data nerds and love statistics and economics and can get into the power of the methodology, please, I encourage you to go download a copy. For those of you that sit more in my camp of someone who gladly gifted away my stats book after an obligatory course in university, there is a pared down version of this that we as the Mobile Money Program have published. It's a short report summarizing the findings of the larger study. So I encourage you to get that copy. But without giving too much away, I am delighted to say that the research found compelling evidence that mobile money had a positive and significant impact on GDP growth between 2013 and 2022. So for now, I'd like to introduce my colleagues, Rishi Raithatha, Director of Data and Insights for the GSMA Mobile Money Program, and Calvin Bahia, Principal Economist at the GSMAI, to tell you more about the results of the report. With them, please also welcome Angelica Pesha, the CEO of Tigo Pesa, Anne-Catherine Tchokonte, the CEO of Orange Money Cameroon, and Richard Yego, the CEO of MTN Momo Uganda. I hope that you really enjoy this rich discussion. Welcome.
I was just being asked about gender balance. We've got the Queen in the middle, so I think we've done well to start off with. Muraho. Amakuru. Abanyarwanda bangahe. Shira amaboko hejuru. Murakoze. Murakaza neza. Bonjour à tous, hamjambo, and a very good morning to everyone. Thank you all for being here. For those of you whom I promised a coffee to come, please come and find me afterwards. So that would be Emily and William. So now, let's start with a question. So this is for the audience. In US dollar terms, how much do you think mobile money has contributed to the GDP of countries which have a mobile money service? By the way, there is a prize. Sorry? 11%. In US dollar terms? In US dollar terms? Anyone else? Guess no one wants the prize.
Well, I mean, she's made the guess. So I think
made the guess, so she should get the prize. Yeah.
Yeah.
Okay, I think that's reasonable. So let's just ask you, I guess, Calvin. We've got you here, and you led the technical study that we did for this, as Ashley described. Now that we've published both the short report and the technical note, between the period that you studied, what was the actual impact of mobile money on GDP?
Thank you, Rishi, and thank you, Ashley, earlier for the kind introduction. So before getting into the number, which I suspect everyone is interested in, just a little background on what motivated this study. So the last 2 days, well, the last 2.5 days of this conference, I've been in 4 or 5 sessions where I've heard a statistic or variations of the same statistic, which is that a 10 percentage point increase in the use in mobile broadband adoption increases GDP by 2%. So 10% increase drives an increase in GDP of 2%. Depending on the study in the region, that varies between 1% and 3%, but that study that finding is very well established. We've never had anything comparable for mobile money until with this report. Even though, as Ashley said, there have been numerous studies showing the impact of mobile money at an individual level, that it reduces poverty, it increases consumption, improves livelihoods, and also allows firms to invest more as well. We also know from studies that increasing access to traditional financial institutions increases GDP in both high-income and lower-middle-income countries. So we know mobile increases GDP, we know financial inclusion increases GDP, and we know mobile money has benefits at an individual level. So it kind of should seem like that it should have an aggregate impact on GDP as well. And fortunately, the paper we've did and the analysis we've done does confirm that. So the top line result is that if mobile money adoption increases by 10 percentage points, then on average the GDP will increase by between 0.4 and 1%. Being an economist, we're not always right, so we're a little bit reluctant to commit to a specific figure, but however you look at that range, I think that's considered to be would definitely be considered quite significant. And then just to finish, applying that to, so we know that mobile money has evolved differently in countries. As Ashley said, in East and West Africa, it's been very prevalent. If we look at how adoption has evolved in those countries and say, seeing how that's what's happened, what is the actual impact on GDP? That's the chart you can see there. So by the end of 2022, in terms of where the industry is, if you put all of that analysis together, the results show that in mobile money countries, the adoption of mobile money increased GDP by $600 billion, or 1.5% of GDP. So not quite as high as the guess, but she was the closest.
Yeah, that's fair enough. So $600 billion is the magic number that we finally got. I want to now just ask our other panelists here about that. So you've now heard about the measurement of the industry's impact at a global level. Is it as much as you suspected it would be? Is it in line with your expectations? And what does this number now mean for your respective markets? And I'm happy to start with Angelica.
Thank you, Rishi and Kelvin. Good morning, everybody. So I think hearing the actual study and the actual number is very exciting. Being in the industry, we understand the impact we are having on the economy, on the people, but having the quantifiable number is very exciting. Suspecting it is very important, or we are having a very big impact, I suspected, but 1.5% as the quantification on GDP, I think I'm very excited to hear that. And this gives us a better platform, or it makes it better for us to have conversations with regulators and policymakers to really put more effort. Because if we can have 10% give us 1.5, why not make it 20%? Why not make it faster so that we can get the GDP impact even faster? So it's very exciting, and I'm very happy that we have this number now quantified, and we can use that to do even more as mobile money players. Thank you.
Thanks, and I'm happy you mentioned the dialogue with policymakers and regulators, and we'll get to that a little later. But I want to ask you, Anne-Catherine, are you as excited as Angelica is about the number?
Thank you, Richie. Good morning, everyone, and thank you to the GSMA for putting figures on this intuition we all have on the field. I'm completely aligned with the conclusion. What we see is that mobile money has really gotten into day-to-day life of our customers. It is making their lives easier. Financial services is also, bringing people out of poverty. Imagine, a palm oil seller that does not no longer have to travel to pay her supplier. She can be delivered at home. She can pay the school fees from her home. She can send money to the village for the health fees of one of her relatives. So it's really great news to have these figures. And as Angelica said it, we really need to leverage on this information to make the place of the mobile money into the discussion and financial inclusion bigger.
No, fantastic. Thank you for that. Richard, your turn. We had this conversation offline when I asked you, what did you think? And you gave me a very good response, and I was hoping you'd recall it here as well.
Yeah. Thank you, Rishi. I think, just listening to the actual impact, quantifying the impact in terms of percentage terms, I think is exciting for us. Because, when you look at, for example, Uganda, we've been growing about 3-4%. 5%. We're targeting 5% growth this year. What that means then, that if we're contributing 1.5% of that, then I think it really excites us, because then we're able to have very candid conversations with the government entities, the regulators, to be able to see how much we are contributing as mobile money providers, but also speaking to how many more customers can we add if we have, let's say, 11 million customers, I mean, this is for MTN, what does it mean if we raise this number to 12, 13 million? Then we can be able to quantify the incremental, transaction value, because that means then transaction values will grow. But also, it challenges us more, the opportunities to ensure that, first of all, we address liquidity challenges, because if we can address liquidity challenges at the agent network, we also drive more of the cashless merchant adoption, but also the consumers, of course, would want to improve their disposable income. Then there's opportunity to lend. How do we lend more to the consumers, to the agents, the merchants, and oil the ecosystem more to be able to drive even a bigger increment? If that increment looks like that today, how do we raise it to 3% going forward? Thank you.
I mean, there's a reason I thought your response offline was great, because you mentioned a few key words there. And I'm now going to ask Calvin about that, actually. So the reports, both the slimmed-down version that we've published and the technical note that you've published, they identify the types of countries that mobile money has impacted, and in particular, how mobile money has impacted GDP growth. Now, what are these growth drivers?
No, it's a very good question. So some of them actually were quite very well articulated by Ashley earlier, because we know from previous studies that have been done that mobile money helps individuals and consumers cope with economic shocks. So we know they can cope better if they suffer, for example, an illness in the family or a weather-related shock. So that helps to increase their long-term consumption and welfare. So if you add all of that together, in theory, that should also lead to better aggregate economic outcomes. We know that's already been mentioned that mobile money reduces transaction costs. It enables businesses to expand their markets, so that should improve business revenue and investment. Where mobile money drives the use of more sophisticated financial products like savings and credit, we know, again, from past evidence that that stimulates more productivity in an economy. And the last mechanism I would mention is by formalizing payments, it also increases the size of the formal economy, which broadens the tax base, which benefits governments, and might come onto this later, it also enables more effective monetary policy by central banks. So you put all of those together, and those are the channels in which it can impact GDP. One of the other key findings I wanted to highlight from this is we went beyond this and said, this is the average impact of adoption, but when you adopt mobile money, that's not just it. It's then about how much do you use it and what do you use it for. And again, with thanks to the amazing data that Rishi and his team collects, we went further than this and said, what's the impact not just of adoption, but of people using mobile money more and using it for ecosystem transactions like merchant payments and bulk payments and international remittances. And actually we found that these impacts of mobile money are enhanced by usage more. So adoption is the first step, but if you use mobile money, then that drives the impacts more. And we've actually got some numbers on that in the report, so I can summarize them as follows. We see there that the overall impact was 1.5%. If average transaction values and if the use of ecosystem payments had not changed in 10 years, if we just held it fixed in 2013, that 1.5 would have been 0.9%. So still quite significant, but it would have been less. But we can increase that, and what that effectively means is 40% of that impact you see there is actually driven by more usage of mobile money, more transactions, and broader use of ecosystem payments as well.
Fantastic. Thank you very much for that. And so we've now heard that an increase in ecosystem transactions leads mobile money to have a greater impact on GDP growth. To what extent is this likely to lead to more partnerships between mobile money providers, whether they're yours or others, and other ecosystem players? And again, happy to start with Angelica.
Perfect. So I think we are looking at mobile money, the evolution of mobile money. If I can circle back a bit from the story, several years ago, mobile money was simply send money, cash in, cash out. And at that point, it was more of the mobile money player who is doing everything. But we've come to a point where mobile money platforms are actually platforms bringing in an ecosystem of so many other people. To quote Tigo Tanzania, Tigo Pesa. So we are looking at 13 million customers, and we have over 150 active agents who are transacting on a daily basis. We have over 250,000 merchants who are accepting payments on a monthly basis. And also we have over 3,000 businesses that are connected, small, medium, and large businesses. So in terms of partnerships, we could not get where we are if we are not looking at bringing in different players together. We've innovated recently. We have products like savings, we have financial services, and we can't bring all these without partnering. We are looking at merchant payments. Payment is the way that will bring everybody into the ecosystem, because from the morning to evening, we have 2, 3, 4, 5 payments that are done by every person. So how do we make this easy for every person? We can't do it alone. So partnerships are coming through. We are looking at different partnerships. We've partnered with MasterCard to bring in merchant payments, several partnerships, and this is the way we can bring in use cases. Because without more use cases, then the usage will not increase. And we've seen with the increase in usage, then we have more increment in the contribution to GDP. So essence is partnerships. How do we work with different players, different organizations to bring different products and more use cases to the customers that we've been able to reach? And how do we reach more people? Because there are other people we haven't reached. 13 million customers in Tanzania is very low. We have 65 million people. So there's so much opportunity still. But for us to get to where we want to go, we can't do this without partnerships.
Thanks, Angelica. And Catherine, you come from Cameroon, of course, which is in Central Africa, and we always talk about East and West Africa. But what does it mean for you to pursue these kinds of partnerships to capture opportunity in Central Africa?
Thank you, Richie. First of all, I would like to mention that compared to East and West Africa, Central Africa is still small in terms of mobile money industry. In East Africa, you have almost 400 million customers registered account. In Western Africa, it's around 300 million. Central Africa, which is of a comparable size, only has like 65, 70 million registered accounts. So it means there is still a huge way to go to continue to increase what I would call the domestic ecosystem. Of basic transaction, merchant payments, etc. But also, we talking about the impact on GDP. We also have to pay attention to how we finance the economy, because the traditional ways to finance the economy is through, bilateral support, etc. And the mobile money industry today is in the position to finance the informal sector, to finance unbanked people, either through remittances. For example, in Cameroon, we have been able to multiply by 3 over 1 year the amount of international remittances that are received directly on our Orange Money account. And it is still very small versus the potential, because we know diaspora is playing a role in our economies. Another example I would like to take is the nano loans. It's also a means to finance the economy, to finance the informal sectors, and we mobile money operator has a key role to play in that. And I completely agree with Angelica. We are not going to do it alone. There's so much opportunity in terms of financial inclusion that we have to rely on, partners that have developed different type of expertise on different niche to make sure that our populations are really going to seize the opportunity. And what I'm really proud about on mobile money is actually, I feel it and I see it like an African innovation to African problematics, and we are just at the beginning of the story. There's so much more to do, and we definitely need to increase our ecosystem to do that.
Oh, fantastic, thank you very much. And as much as we can perceive it as an African innovation, the impact that it has had on GDP in the principal regions of sub-Saharan Africa is significant. And I'm not going to give anything away. It's the next question, the next slide, of course, as well. And before that, of course, I've got to ask Richard about his thoughts on whether we feel that this information, this data, will compel more partnerships to come out between mobile money providers and ecosystem players. Of course, you spoke about lending and ecosystem, more ecosystem transactions when we were talking off stage. So I'm curious to hear what you think as well.
Yeah. Thank you very much, Rishi. I think what is clear, I think in Africa, most of the countries, I think the biggest contributor to the GDP growth is the SME sector. And I think, and of course, the agriculture, which is 80% contributor to the GDP in terms of employment. I think what this then gives us focus on is how do we focus more in the informal sector, the agriculture chains. We recently launched, an FMCG chain that links, the farmer right to the factory. I think that gives us an opportunity to scale. How do we scale this solution where we connect, we digitally connect the entire chain of, from the farmer right to the distributor, right to the factory, such that whatever has been transacted as cash is then digitized. That then should give us a bigger boost. But also when you look at the remittances that Uganda received inbound in 2022, it was just about $1.1 billion, of which about 38% of that came through MTN. But when you look at the digital channels, they could contribute about maybe 80%. That is what we could measure. Then this, again, gives us an opportunity to say, how do we, harness more of the inbound, but also outbound. Sending of money was very expensive, but we took a bold decision to lower it at the same rate as a domestic transfer. And we saw a 50% growth in the first 1 month of, funds moving, out of Uganda, but also getting into the country. So we see a huge opportunity. I'm talking about inbound remittances, outbound. I'm talking about the digitization, of those chains. Of course, the partnerships that we've had, some of them that have been quite successful. We're talking about Insibuco and so many others that have really supported us, especially with the farmer digitization. We're talking about lending partners. We need to onboard more of them onto the ecosystem to be able to boost, more funds to consumers, agents, merchants. Talking about even engagement with the regulators to see to it that, certain regulations are relaxed. KYC is a big issue. How do we get the national ID easily accessible across the markets? Because we know there's a big number of consumers that do not hold national IDs, and customer acquisition starts with the national ID, access, easy access. So those are some of the engagements that we should be having going forward, but also grow the ecosystem more and develop better products to ensure that the usage grows within the consumer base.
Great, thanks, Richard. So we've now heard about the global impacts of mobile money on GDP. We've heard about drivers for this as well. Let's just think about some of the principal regions that we always think about. Calvin, how did GDP change in mobile money countries? And importantly, I guess we're here for this, I suppose, how does this differ between the two regions where mobile money has grown faster than others? And that would namely be East and West Africa.
So very good question. So that's what you mentioned there is a very key point. So when we do this analysis, this is based on any country or every country in the world that has launched a mobile money service since 2013. So we're aggregating markets in East and West Africa, throughout the Sub-Saharan Africa region, but also in APAC and Latin America as well. Some of which have seen similar rates of adoption, but many of which it's still very much growing and in its early stages. So we're grouping lots of different regions there to get that figure of around 1.5%. So the obvious follow-on question is, if we were to just focus on Sub-Saharan Africa, where we know mobile money is more widely used than in any other region, presumably that figure looks different because you've got higher adoption levels, so that should be driving higher impacts on GDP. So we did look at that and we broke that down, and that's in the study as well. So if we replicated this but just did Sub-Saharan African countries, that impact of 1.5% does increase to, thank you very much, Rishi, to 3.7%. So in absolute terms, that's $150 billion. If we then go to the two regions where mobile money has scaled within Sub-Saharan Africa, Eastern and Western Africa, you can see the impacts increase even more. So in Western Africa, it's 4.1% GDP impact, and in Eastern Africa, it's 5.9%. So that's how the breakdowns look. And I think this serves two purposes. One is to obviously highlight how the impacts differ between regions depending on their use and adoption of mobile money. But to the point that was mentioned earlier, where we see certain countries where mobile money hasn't scaled, it's maybe in sort of the lower range, I think this represents hopefully a very valuable proof point, which is to say we're currently quite low. If we can increase and scale to the regions and countries where we've seen higher impacts, that's where we could be. Maybe at the moment we're at 0.5, 1% of GDP, but if we can really scale it up, those are the impacts we can see, which are even larger than the aggregate figure we saw before.
Fantastic. Thanks, Calvin. And I honestly wasn't lying when I said this is what everyone's here for. I saw so many smartphones go up. I felt like, well, suddenly we've become rock stars. So, Angelica, you said to me off stage, I like the East African number a lot. And now everyone knows why you like it a lot. So I'm going to start with you. We've got higher adoption of mobile money that when you combine with higher transaction values, we know this can drive economic growth. We've discussed increasing activity rates many times in the past. But with this new information, what do you think mobile money providers need to do to increase the use of mobile money for everyday transactions?
Thank you, Rishi. I think, yes, as I said, I like the East African number more. So 1.5, and now we're saying 5.9. I think that really shows the impact and the output of what we in East Africa have been doing as mobile money players, trying to bring mobile money to everybody and including the unincluded. So 5.9 is good, but why not 10? Why not? 5.9. So how do we get to 10, or how do we improve the 5.9? We as mobile money players, one, we need to continue innovating. That is the first point. So we have several products and services, but we need to innovate and use the data that we have to have specific solutions for all products for specific people. Now we can understand our customers better with the technologies that we have, AI that is here, adaptive analytics. How do we make sure the products are not one that suits all, but a product specific for Angelica, because I know Angelica is different from Rishi, and so we need to go to that level. That is the first thing we do. But again, as we continue innovating, we need to make sure these products are very simple to use. And part of the beauty about simplicity is it's easy to bring in even the people that we haven't brought in so far, because these people are looking at something that is more or less what they're used to. And I'll give this example that helped us understand the importance of bringing products that are very simple. So we launched a product called Tigo Pesa Kibubu, and this is a saving product. We had a very big argument within the teams of how to bring the products to market. Some people wanted it to be complicated and others wanted it to be simple. So we ended up with a simplified version, which is simply taking the piggy bank as you know it today and digitizing it without complicating it. So as simple as that. The impact that we saw was phenomenal. People found it very easy and they could identify with this product because it's exactly what they do every day. They take 100 shillings, put in their piggy bank, they take 200 shillings whenever they have. So that simplicity of whatever you have today, you can save it away and you get 7% interest. So the difference is you do it exactly the way you do it locally, but we're giving you value that you can have interest on it. So that simplicity brought in over 150,000 customers very quickly to this product. Something that sitting in the boardroom and trying to bring this product together, we didn't think would have that impact. So simplicity is very key. And maybe the last point is to continue educating our customers and being very careful with cybersecurity. So we need to make sure security is very, very good. We are adding people who are not as knowledgeable because we need to reach everybody. So we need to make sure we keep educating them, but also have the right security to support. So let's have the biometrics, let's have the authentications that we can have to make sure the safety of the customers is guaranteed. So I think those three examples is very key for us to continue.
Fantastic.
Innovating.
Thank you very much. And I'm very glad you like the East African number. I like it too. And Catherine, I don't have a Central African number for you, and I apologize for that, of course. But you can see that the impact is significant when you think about Sub-Saharan Africa and the two principal regions that we have here. But the same question to you. What is it that you think with this information that mobile money providers can do or need to do to increase the use for everyday transactions?
Okay. Thank you, Richie. So if I do a quick average, if Eastern Africa is at 6% and Sub-Saharan Africa is at 3.7, probably Central Africa is around 1 point something. So there's a lot that can be done. I think in Central Africa we have to start with the basics, like registering more accounts, enhancing the usage, because once more, Central African weight 15 to 25% of Eastern Africa or Western Africa in mobile money industry. Angelica mentioned innovation, security. I will not come back on that. I think something that can be a game changer is the support of the regulation and the fiscal authorities, because in Cameroon, for example, we have been having a tax on mobile money transaction, which is 0.2%, which is actually much higher than the VAT. So it's a lot to make the product less affordable for the customers. So we need our fiscal authorities to understand that they should not burden the mobile money industry, because they are actually kind of limiting the GDP progression growth. Now, talking about regulatory or fiscal or political decision, I think they have really a great job to done, a great contribution to do here. Because imagine if a government of whichever country we are from decide that all the public fees are going to be collected via mobile money. So the school fees, the public school fees, the hospital, for justice, I don't know, for tax, etc. This is going, to bring our customers to, much faster than they would have naturally convert the cash transaction to digital payment to do it, and that is at the service of the GDP and also of our government, with all the advantages that the digitization of payments brings on the table in terms of traceability and better collection, etc., etc. So these are few things that we can do, and GSMA and us operators will really need these results to be known, to be understood, and so that the opportunity of mobile money can be seized. Thank you.
Thanks, Anne-Catherine. Richard, you're from Uganda. Are you as excited as Angelica was about the East African number? Are you as happy about it as she was?
Yeah, Rishi, I'm quite excited, but I think we can actually do more. I know quite a sizable chunk could be coming from our neighbors in Kenya in terms of the contribution. But of course, the challenge remains within us, and I'm talking about the Fuliza product, which I think has been quite successful, because then it enables you complete a transaction even when you're stuck, you have less funds. And we've piloted a similar solution, more advanced, in Uganda. And so far, results are good, but we have an opportunity to actually scale it much bigger, because we've noticed that it is actually much more powerful than your term loan, because then it goes into solving the need that the customer has at that very time. Of course, this also speaks to the agent network. When we do float gaps, when we try to assess the float gaps in the market, we see that on average in a month, we see about a gap of about $30 million in terms of the opportunity that is lost because the agent has less funds on the account. So again, this gives us an opportunity to be able to advance. We've actually gone as far as advancing agents with float on a daily basis, which we then pick back later. And today we do about $2 million daily, and we need that to get to $10 million in the shortest time possible. And that also speaks to how will it translate? Because it will translate into much bigger impact, especially speaking to this number. If we can get to $10 million daily from 2 million, then the 5.9 probably could get to 8%. So I think there's a huge opportunity to us as the providers, but also engaging with the relevant stakeholders, the regulators, to be able to, for example, how do we raise limits? Because we know there are transactional limits. Some markets have done limit reviews. We also have limits which cut across different clientele. And I think for us, it's a challenge to continuously improve. How do we make it easier? How do we get onboarding faster? how do we get the user experience much easier. Those are some of the things that we need to work on. Of course, fraud is a big one. Cyber security. I mean, I believe it's in every market, and most of it is socially engineered. So again, awareness levels. How do we create awareness as much as possible, which is something we've done quite a bit, and we've brought down at least the fraud cases by about 60–70%. Because if there's no trust in the platform or in the service, then there will be no usage. So that we cannot, pay a deaf ear to. We have to resolve all these issues. But it's a collective effort. We can't do it alone. We do it, with all the partners that we work with. Thank you.
Thank you very much. And yes, absolutely right. Trust is extremely important. So we now have some powerful numbers that show what the impact of mobile money is, in many countries, but particularly in sub-Saharan Africa. So my final question to all of you is, for governments in countries with high mobile money penetration, this is encouraging news, basically. How might governments and regulators, you were talking about regulators, Anne-Catherine, and I thought that was great that you mentioned that, but how might they react to this, and how might they change policies towards improving access to financial services? And let's do something different. Anne-Catherine, I think you should go first this time.
Sorry, thank you, Angelica. Thank you for the question. I think that we need to do in French what we call corps à corps, to be really close with them, because it's not easy to change a policy from a day to day, from day one to day two. So, for example, in Cameroon, we have already been engaged in tax collection via Orange Money. So I think for the specific taxes that we are collecting, the fiscal authority is understanding how better the collection and easier the collections are for them. The challenges is that we probably need to go from ministry to ministry to convince each authority to turn to digital payment, but this is our job. We will do it. I think also something that can help. Richard mentioned stakeholders, because sometimes funders will say, okay, if you want us to lend you money, then make this change in terms of governance or whatever. So this is also something that can help governments to be accompanied in the way they are going to adapt their policies to integrate mobile money as part of the agenda.
Fantastic, thank you. Let's go to Richard next.
Yeah. So Rishi, in Uganda we had the National Financial Inclusion Strategy 2017 to 2022, which has now ended. We are now we're actually reviewing the National Financial Inclusion Strategy 2, which is running from 2023 to 2028. And of course, it's an opportunity. This has come in handy. I think it's quite timely for us to be able to then present to the stakeholders, all the stakeholders concerned, in terms of how do we build this, strategy, for the next 5 years, especially for Uganda, if we want to drive a much bigger impact in terms of economic development. So I think this is an opportunity for us to be able to then use this information together with the government, ministries, agencies, as well as the regulator, to ensure that we come up with a very solid strategy that is aligned to what we want to deliver if we want to grow this much bigger. Of course, we do have regular engagements with the central bank as well, the Minister of Finance, the tax authority. Today we have a 0.5% tax on cash withdrawals, over and beyond the 15% excise duty on the transaction fee. So the burden is quite huge, especially when it comes to a cash out, and that's why we've deliberately tried to grow as the merchant network as quickly as possible to tell the customer, hey, you don't have to take it out in cash, just pay using Momo. And I think that again speaks to more digitization, going cashless, or I could say cash light, because cashless completely may take a bit of time to achieve. But I think for us, it's an opportunity that we have this information now to be able to then socialize it with all the stakeholders and be able to come up with a much solid strategy for the next 5 years for the country.
Great, thanks, Richard. And you're talking about merchant payment growth. We've just heard that ecosystem transactions drive that. So, yeah, absolutely interesting to see how that pans out. Calvin, I'm going to ask you next because Angelica's sat in the hot seat, so we should let her speak last. But when we conceived this report, we weren't really thinking too much about policy implications. But you had some good ideas, and I think it'd be interesting to hear them.
No, that's true. But actually, another reason to read the report is, as part of the analysis and the strategy we pursued, the report actually does validate research and analysis that we've done in previous years, which is that enabling regulation does drive mobile money adoption and usage in terms of having level playing fields between banks and non-banks. Some of the things mentioned, proportionate KYC, enabling agent regulations. So that link between enabling regulation and mobile money adoption we've quite well established. This, I think, provides a helpful further link that says that increased mobile money adoption and usage now has wider economic benefits in terms of high GDP growth. And I think Anne-Catherine highlighted a very important point, which hopefully this provides a helpful evidence and proof point to stakeholders outside of telco regulators and even central banks. So I think taxation, for example, is a good example. We've seen countries that have imposed mobile money taxes on consumption. We have seen a decline in usage because it makes them less affordable. And now that you can use this to it, and often the regulator or the telco, often they would probably agree with that assessment, but the key stakeholder there might be the finance ministry or the economics ministry, who's focused on short-term tax revenues. So hopefully with that evidence like this, you can use that as a proof point to say, actually, yes, in the short term you might be getting this, but in the longer term you're losing all of these wider economic benefits which improve people's lives, and in the long term you're also reducing your tax base, which is then going to impact in the long term as well. So hopefully that's one of the benefits of this study.
Thanks, Calvin. I mean, I do remember looking at taxation in Tanzania about 6 years ago, and I remember thinking about this sort of statistic at a country level. But the fact that, and Catherine, as you were mentioning, we've got this now at a global level, regional level, and of course we'll see how we can provide a figure for Central Africa. Hopefully that gives a bit more impetus to the value that the industry presents. But Angelica, I haven't forgotten about you. So the same question to you. How do you think governments, regulators are likely to reconsider policies towards improving access to financial services?
Thank you, Rishi. I think it's good that maybe now with this report we'll be speaking a language that they understand better. We've been talking about a lot of value that mobile money brings, but not quantifying it in terms of DGP contribution. So I believe the central bank, the Ministry of Finance, and other regulators will understand this contribution better than maybe other matrices we've been working with. So it makes the conversation easier and maybe better to sit with the regulators and tell them everything we've been saying now can be quantified into the GDP growth. So we all want the same thing. We all want to grow our GDPs in different countries, and the essence is we've seen the contribution that is coming from the mobile money space. And we understand that mobile money is more of a volume business. So how do we get to everybody? So I think with this understanding and with this as a tool that we can use, we need to continue engaging them and making them understand and see that for us to get to where we want to go, if we're looking at 10% maybe in the next 1 year or two, we need to reach everyone else. We do this simply by payments. If everybody can use mobile money to make every payment, we will get there faster. If we can go into agriculture and make sure we are able to innovate and have mobile money become the major support to the agriculture business or the agriculture sector, that is very important. But again, we need to make sure we bring all the regulators or all the different government bodies that are involved, because we touch different aspects. We're looking at the central bank, they will understand this better. Ministry of Finance, we have the ministry, the taxation authority, we have the Ministry of Telecommunication. So it's a number of stakeholders, and sometimes these people do not have the same understanding, or we don't speak the same language with them. So I think it's very important for us to start bringing all these players together, all the government bodies, and we have one voice, one language, for us to be able to showcase the impact on GDP growth and move forward with that. Thank you.
Thanks. That's my takeaway from this. Let's all speak the same language. Before I open the floor to questions, I have a question for you, Calvin. I remember when we started this work, you were very excited because this was something that no one has done before. You talked about some feedback that the technical report had received. What was this feedback, and what does this mean for the work that you've been doing on this project?
No, that's exactly right. There've been so many studies looking at the impact of mobile broadband and none really looking at the macroeconomic impacts of mobile money. So the way in which we did this, the techniques we use, they're not revolutionary. They're reasonably standard. The reason why people haven't done this before is due to the lack of high quality data. So really, most of this was primarily driven by you and your team who have been collecting this data. What we did, wasn't hugely different to what we've done in other studies, but that's, I think, is the real value. Obviously, we hope this will be used for policy and advocacy, but we've also started, for example, we're going to start sharing this report with other stakeholders. We're also going to be taking this forward as a potential publication in an academic journal. It's already been accepted in some conferences. These conferences tend to rank the papers in terms of how useful and important and robust they are. And what we've got at the moment is that these have been receiving some of the highest ratings. So we're really happy that this report has been published, but for us this is just the first step. I think the next step is to make sure to start engaging wider groups, to make sure the analysis is robust and we increase visibility of it. And then it's also about using it for advocacy and engagements in improved policy making amongst governments in low and middle income countries.
Thanks, Calvin. I can't really take credit for the data. That's down to our friends to the left for supporting us with their data for the State of the Industry report and other things that we do. With that, we've got about 10 minutes or so for questions, if anyone has any for anyone in the panel, really. There should be somebody coming around with a mic shortly. There's a few in the middle here. Please introduce yourself before you ask your question.
Yeah, Enoch Komweri from Kenya Central Bank. I just have a contribution and a question. Of course, in Kenya, more than half of the equivalent, the GDP last year, moved through mobile money. So that underlines the importance of digital wallets to our economy. And of course, when such amount of money is moving through the mobile money platform, there is something which goes to the GDP. Now, a question comes to the increase of usage. Of course, most of the payment service providers, that the mobile money operators, are trying to do a lot of marketing, and we have very many subscribers. But when we are doing our analysis, we discover that most of the subscribers are either dormant or inactive. Some subscribers, the inactivity in a month is up to 50%. What can be done so that these subscribers can transact to increase the activity and usage of the mobile money? Thank you. That's a question to all of you.
Who fancies it?
Okay, so I'll go first. Thank you for that question. So inactivity is a big issue. It's a big challenge across the markets, I believe. And of course, our challenge remains, how do we get the entire base transacting? So for MTN, we have over 18 million customers, of which, that's on the GSM side, of which close to 12 million are using mobile money. So there's that gap of 6 million that are inactive. And of course, the idea is to not leave anyone behind. So how do we get the entire 18 million base transacting? That remains our biggest challenge. But of course, when you try to dissect the causes of some of the churn that happen, some of the customers forget their PINs. So if a customer forgot their PIN, I can tell you they may not put much effort in getting it reset, for example. So really is to ensure that we come up with self-help options. How do you reset your PIN yourself? Because that then gives convenience to the consumer. We also try to trigger, some of the activity using our customer value management, call that CVM, regularly to ensure that this customer is reawakened. Throw in a carrot, once in a while for the customer, for them to be able to come back to the platform. So a number of initiatives, no single silver bullet, but a number of initiatives, on-ground activations. How do we get some of the customers back onto the network? What do you give them back for them to return? Credit facilities, how do you encourage them that, with more activity, you'll be able to get a loan from us. So some of the products that we develop are quite targeted to the inactive customers to really encourage them to come back on, because some customers will tell you, but the services I want, you're not offering them. So how do we develop services that they actually want and not what we think that they want? So we speak to the customer and try to identify their needs and then develop. So a number of interventions that we'll have to make. On the product side, it could be pricing, it could be the usage journey itself. Probably it is difficult to use. Some customers are not used to USSD. How do we get the smartphone penetration increased? Because then the app is much faster, it's much easier. So in terms of the user experience, and that of course speaks to the PIN, customer forgetting a PIN, how complicated is it? How easy is it to access us through our service centers, call center, WhatsApp? So all the access channels need to be improved for us to be able to reduce inactivity. So no single solution, but a combination of many from our perspective. Thank you.
Yeah, that's reasonable, and I think UX does come up quite a lot now. Anyone else want to have a go, or should we ask for another question?
Thank you. Maybe I can also elaborate a little nuance. I don't know how to say it in English. Disclaimer that I may add is that customers use their mobile money account when they need it. So if they don't need it, they are not going to use it beyond the question of cash versus digital payment. On Cameroon, we know that, for example, people use their mobile money account or their Orange Money account as a saving account. So they will have money, they will put it in their Orange Money account and save the SIM. And, when they need it, maybe 6 months after, they will take the SIM, put it in their mobile phone to use the money. So I don't expect us to go to 100% usage rate. Now, that being said, it's true that the gap between the active users, Orange Money users, and the total registered account or mobile account is huge. Richard has already mentioned different ways to address it. So maybe we can structure it at three level. It's a different way of approaching the topic. First, it's at acquisition. When we acquire or we open a new account, how do we onboard the customers that is totally new to the product? How much information we give him so that he's autonomous when he has challenges, for example, with his or her account. Then we have the usage. Do the services that we are offering are answering its needs? We see that we are in geographies that are still dominated by cash in, cash out. People are starting to use P2P. We also observe that a significant part of our cash in are actually done in a third-party account. So a non-negligible or significant part of the cash in are actually transfers that are described. It means that the cash is still very present in our population usage. So we also need, to increase the ecosystem of merchant, etc. So where they can go and say, okay, I want to use my account and I have it, and it's not as widespread it should be. And maybe the third step is when the customer has an issue. When the customer has an issue, is he going to do? He can call the call center, but not all of them knows the call center. He can take care of himself with like reset pin, self-care reset pin that we launch in Cameroon, but not all of them are familiar with them. And I think their first reflex is going to go to the point of sale, where they do their deposit, cash out, etc. But the point of sale has the information necessary to accompany the customers that has an issue. I think we can do better on that specific point, in addition to what Richard has already said.
Great, thank you, Anne-Catherine. Please go ahead.
I have the mic, so I'm going to ask the question. My name is Dr. Niti Paul, and I'm the interloper in this room. I'm coming from next door, from the Africa Health Tech, the Health Tech Summit. I work for AXA's financial inclusion arm, and I work on health. So my question is a follow-on from this lovely gentleman here. We work with quite a lot of mobile money wallets, with quite a lot of mobile operators, on adding services that improve stickiness. And the only sticky product is health. We've just been through a big pandemic. There may be another one on the way. So just a question to all of you. How do you view people like us who are doing different things in a different sector? How do you interact with us, and how do you make value? It's not VAS, not value add service, but how do you create value for a customer, thus increasing GDP in a very different way? So it's a bit of a off the point question, but I'd love for you to be able to answer that.
Okay, thank you for that question. Very valid question there. So for Uganda, we looked at the current situation. I mean, we have the mortality rate in terms of maternity is quite high. So we're able to develop through our partnership with Clinic Pesa. We developed a solution for expectant mothers that actually they use. They're able to save as low as 30 cents of a dollar periodically over a period of time. But then most importantly, they are able to access medical facilities. And this is not limited to expectant mothers. It also cuts across any other individual that might have a need for medical treatment, because we cannot tell when we'll fall sick. So what we encourage the customers to do is to save as little as 30 cents of a dollar. And then consistently, it could be daily, it could be weekly, and then they're able to get that insurance cover to get medical assistance. I think that's very, very powerful, especially when it comes to the health sector. And we believe, when we're going to continue working, of course, we also have IO Insurance that we work with, the insurance brokers, in partnership with Sanlam. Again, this is an insurance solution that we couple with the products and services that customers use. It could be a P2P that a customer is sending, it could be school fees, but then we couple in an insurance benefit which the customer is able to access when the need arises. So very important to look into the health sector. I know we've not done quite well, but it's very important that we look at that area as well. We now need to scale. That's from my perspective. Thank you.
Thanks, Richard. Anyone else got a response? We do like interlopers and random questions, by the way. Very welcome. I can just very off the cuff, if you look at the annual reports of MTN, the last annual reports of MTN, Airtel, Vodacom, and Orange, each of them talk about insurance, and they're not just talking about agricultural insurance. We all know that health insurance is sticky. So my guess is that the industry is aware of the importance of partnering with organizations such as yourselves. Hopefully it won't be too long till it becomes ubiquitous. Excellent, we will. She's asking for an appointment, or offering one. Great, I think we've got time for one or two more questions. Oh gosh, okay.
Hi, Rush. Exciting content from the panel. My name is Aston Njovu, and I'm with ZPay. So we're a remittance institution focused on pushing remittances from the diaspora into Africa. So our main focus is to make sure that remittances just keep coming in. So last year we processed 2 billion and we're moving more this year. So now my question is mainly on one of our important aspects in this remittance business, which is reduction on pricing with regards to remittances into mobile wallets, bank accounts, be it cash pickup. So I've been following the trends with regards to taxes and activity on wallets. My question to Richard and Angelica is, have the taxes been levied in your jurisdictions? I understand your jurisdictions have taxes. Cameroon, November last year, and Uganda, you've had taxes. Tanzania as well since 2018. So I want to understand what the impact has been with regards to taxes. And I understand taxes came in during COVID times and post-COVID, or because the governments wanted to raise more funds. But what has been the impact to adoption of your services and a ramp up or a surge in activity on your use cases on your mobile wallet?
I think I'll start. So mobile money has been taxed in Tanzania, I think, for quite some time. We have excess duty and VAT on all transactions. But the unique thing that happened in the market in the last 2 years was a levy. So something extra on top of the VAT and excise duty. And this came in as an extra burden to the customers because it made transactions very, very expensive. So as an industry, we lost value very quickly to the tune of about 40%. And it was detrimental to mobile money because this levy was only on mobile money transaction and not on bank transaction and all other financial institutions. But I think to the point of making the regulators understand the value of mobile money, I would say maybe as an industry in Tanzania, we hadn't done a very good job, but this was an opportunity for us to go back and try to make them understand how detrimental such decisions could be to the business, showing them live examples. So it took us quite some time, but eventually our government and our regulators understood and listened, and this levy has been more or less scrapped or taken off. Not 100%, but to a very great extent. And since then, we see transactions coming back up. So the essence is mobile money has become an everyday transaction and it helps everybody. So if we tax it or make it any more expensive, we lose all the work that we've done. We lose all the benefits we are talking about. So maybe if you hadn't had the levy in Tanzania for the last 2 years, 5.9 could have been even higher. Maybe, because there's so much value the industry lost, over 40% loss into the value of mobile money. So I think the most important thing is at this stage where we are, the most thing we should do is really make it available to everybody, make it easy instead of making it hard. Thank you.
Yeah, so for the perspective of Uganda, the 0.5% tax on cash withdrawals came in 2018. So we've had it for 5 years now. And what the impact we saw immediately was high value transactions of $200 upwards, because what that means is the higher the amount, the higher the tax. So if the transaction amount hit $100 upwards, then we saw a dip of about 50–60%. That's quite significant. And of course, then what customers would then resort to, because it came at the time when agent banking was also starting. So then customers were opting to deposit onto bank accounts and then ultimately pull it, probably either pull it to the wallet and use it in a different manner or go to the ATM, and later cash it out. So, but the behavior we saw at that time was customers that would deposit, because remember, most of the cash outs are following cash-ins. She mentioned earlier, the cash-ins, those are direct deposits. They are remote to a third party, and therefore the recipient is quickly ready to take it out. So as opposed to taking it out, some of them would push it to the bank account, those who have linked their bank accounts. And of course, then we were losing value. And at that point, pushing money to a bank account was very, very low. The fee was very low. And of course, as mobile money operators, we had to raise that fee because then we were loss making. Because when you do a cash in and then it is taken to the bank, there are commissions that have to be paid. There's a cash in commission. Cash in is zero rated, but then the agent expects a commission, and therefore it would put the business in a loss-making position. And of course, we had to adjust the wallet to bank rates to be able to take care of those costs. So yes, indeed, there was a negative impact in terms of value of transactions, especially for that ticket size. And of course, what that then gave us an opportunity, because at that same time, we're also trying to roll out MomoPay, which is the merchant payment solution. And then, of course, it was an opportunity to quickly roll out the merchant network. Today, we stand at 290,000 merchants who are available to be able to facilitate, transactions which should have been done in cash. And when you look at our cash-in value, it's about $20 million daily. The merchant payment is 10% of that today. And a year ago, it was about 5%. So we are seeing an upsurge in terms of merchant payments, as opposed to the rate at which merchant payments is now growing is faster than the rate of cash outs, which is a good thing. It's a good place to be in because then we are keeping money in the ecosystem. So, of course, we are still engaging government to see that this rate probably is reduced, maybe to 0.2. But of course, there has to be a business case. And maybe also open it up because today it's only on mobile money. It's not on the bank channel. So how do we open it to all channels, but then reduce it probably to 0.2 or 0.1 so that the burden is lessened to the consumer?
Just to quickly add, if you're interested in that analysis more, actually the GSMA has published studies on both the Tanzania and Uganda experience and also a recent report on the impact of the tax in Ghana. So if you want to reach out to Rishi or myself, we can share that with you following.
In the interests of, well, I was just going to say, I'm really pleased with the ambition that I've seen here because, as you said, yeah, I like the number, but it could be higher. So hopefully the adoption of merchant payments, the popularity of it, means that actually when we sit down here in a few years' time, I'll have a bigger number for you and maybe a bigger smile as well. I'm aware of time, so I'm going to have to wrap up. But before I do, I've got a question for you, Calvin. Actually, a question for the audience. I'm sure there are some South Africans here. Who remembers who kicked the drop kick in 1995 that won South Africa the World Cup? What was the name of the person? Right, Joel Stransky said last night that if England would beat South Africa at the rugby, he'd fall over backwards. And I thought, that's interesting. What's the probability of that happening? So you've done some fantastic analysis looking at the past. If you were to do predictive analysis about the future, what's the likelihood that England will avoid a bloodbath against South Africa?
Be very careful. Yeah, economists don't have great track records at forecasts, so we're always reluctant to do that. But if I sort of look at our result, a 10% increase in mobile money adoption increases GDP by up to 1%, I'd reasonably be comfortable in saying that a 10% increase in the likelihood of South Africa winning should increase the happiness of everyone who isn't English by about 100%. Go with that.
I think I'll stick to the cricket. I just wanted to say that producing a report like this is a team effort. But there are specific individuals who should be mentioned. So I want to thank, some of them are here in the room, some of them are not. I want to thank Gianluca Storchi, who is the guru behind much of the mobile money data that you will have seen in the State of the Industry report and that you will see in next year's report. I want to thank Calvin's team as well, so that'd be Harry, Fernando Akille Bayon, and Pau Castells. Within the mobile money team, I also want to thank Duncan Ramsbottom, for project management, Anna Fojage and Vincent Kyung for marketing. And, of course, I want to thank my manager and the head of the program, Ashley Olsen-Onyango, for supporting the project and for giving us, well, having the confidence in us to produce something compelling. And with that, ladies and gentlemen, I also want to thank my brilliant panelists here who've been patient and fantastic with all my requests and 11th hour activities, as someone put it. So thank you so much for being here. It's been a real pleasure for me. And before I hand over to Ashley for the wrap-up, I'd just like to say thank you to all of you.
Thank you, everyone.
Thank you to our panelists and to Rishi, that was great. 1.6 billion registered mobile money accounts, $1.26 trillion transacted over mobile money in 2022, $600 billion in additional contribution to GDP across mobile money markets, $150 billion here in sub-Saharan Africa. The impact of mobile money is both micro and macro. But don't be confused when I say micro. For individuals who have been locked out of the formal financial sector for one reason or another, there is nothing micro about the impact that mobile money has and can have on their lives. Globally, some 1.4 billion people remain unbanked, and many more, despite being included, are underserved. We heard about usage today. While mobile money has contributed to advancing financial inclusion for hundreds of millions of previously unbanked, activity rates have only grown marginally, and 1 billion accounts still lie dormant on a monthly basis. There's work to be done. We talked about micro, small, and medium-sized businesses. These are the backbone of economies globally. Yet they accept $19 trillion worth of cash each year, most of these in low and middle income countries. There's work to be done. While financial inclusion has progressed, it does not often automatically translate into financial health and long-lasting impact. For instance, Kenya has one of the highest financial inclusion rates in Africa at 84%. However, the recent FinAccess Household Survey of 2022 report revealed that only 15% of Kenyans are financially healthy, and this is actually showing a decline in recent years. There's work to be done. Women in low and middle income countries are 28% less likely than men to own a mobile money account. I think you can see where I'm going here with me, so join me. There's work to be done. But as we celebrate the immense contribution that mobile money has had on people and societies, my call to action to all of you is to leverage this evidence in your work to advocate for enabling policies for the continued growth and scale of mobile money, the innovations within mobile money, the evolution of the financial sector. We should all remain laser focused on securing this formidable impact for the long term and increasing it to reach and serve all in a safe and inclusive way. So thank you for joining us today. Please make your way back here at 2 p.m. for a riveting conversation on innovations in African fintech. Thank you.